They told you the infinite money glitch was real. They told you there was a cheat code. They told you a tired, irrelevant company could stop being a business and start being a money printer just by buying Bitcoin and posting memes. So explain the disconnect. Why does the game suddenly feel different? Why does it feel like the music is slowing down? Because the infinite money glitch is broken, and when the music stops, the people left standing are usually the same people every time. Regular people. Before we go any deeper, remember this is not financial advice. This video is for education and entertainment. Every investment carries risk. Nothing is guaranteed, and you should always do your own research. Now let's talk like real people. Here's why this matters right now. This whole crypto treasury company era was a game of musical chairs. As long as the music is blasting, everyone is dancing. Nobody is counting how many chairs are actually in the room. But the moment the music fades, people start shoving. And suddenly you notice there were never enough chairs for everyone to sit down safely. That's what's happening. The trick only worked while the crowd was willing to pay extra for the rapper, extra for the story, extra for the hype, and that extra is shrinking. Meanwhile, down here, the pressure is building. In the United States, household debt is around $18.59 trillion. So what? That's millions of families carrying a backpack of rocks, trying to live a normal life. Credit card balances are around $1.23 trillion. So what? That's groceries and rent being floated on plastic, with interest that keeps biting. And bankruptcies totaled about 542,000 cases in the 12 months ending June 30th, 2025. So what? That's 500,000 moments where somebody finally says, I can't keep pretending. That's the floorboards creaking under the dance floor, and student loan stress has flared again too. In recent data, a big wave of student loan accounts slid into serious delinquency after payments restarted. So what? That's young people starting adult life with a chain on their ankle, right when jobs are getting harder to find and everything costs more. When people are stressed, they chase shortcuts, they chase miracle trades, they chase the loudest story in the room. That's why this glitch spread. Now let's name the villain, the machine. Big banks, big funds, politicians, platforms. The media that sells everything is fine, while you're doing math at the checkout line. The machine's trick is simple. They turn money into a mood. They pump the system when they wanted a party. They inflate assets. They make you feel stupid for not joining. Then when the bill shows up, they act shocked and point at you. And the confusion is the weapon. They want you watching the flashing lights, not the exits. Now let's break down the infinite money glitch in plain language. Step 1. Find a company nobody cares about. A hollow shell. Step 2. Raise money. Not to build anything. Raise money to buy Bitcoin. Step 3. Become a preacher. Tweet like you discovered fire. Post AI memes. Talk about the future of money. And as long as Bitcoin goes up, your stock often goes up even more because people aren't buying your business. They're buying the feeling. Then you do the key move. You sell more stock at the higher price. You buy more Bitcoin. You brag about the bigger stash. The crowd cheers. And the loop feeds itself. Now add the extra gear. The wild swings. When a stock bounces around hard, Wall Street can turn that chaos into cheap financing. You sell a special kind of loan that can turn into shares later. Big traders buy it because the bouncing lets them profit, even if they don't love your story. They don't need your coin to change the world. They just need the music loud enough that the price keeps hopping. So your job is simple. Keep the crowd dancing. Keep the stock jumping. Because that's what keeps the money flowing. And for a while it worked like a cheat code. Why run a boring business when you can run a story? Now here's the fragile ingredient. The premium. The extra price people pay for the wrapper. If a company holds $100 of Bitcoin, but the stock market values the company at $200, that means people are paying $2 to get $1 of Bitcoin. That sounds insane. But the crowd had a reason. They wanted leverage without the instant knockout. A way to ride Bitcoin without getting forced out the moment it drops. That feeling created the premium. And the premium created the magic loop. Because if the stock is priced above the value of the Bitcoin inside it, The company can sell new shares at that high price, buy more Bitcoin, and claim the Bitcoin per share went up for existing holders. They sold dilution as a gift. It only works while the crowd believes. Now the belief is fading. Strategy, the king of this whole movement, is the clearest example. For long stretches, investors were willing to pay about $2 for every $1 of Bitcoin it held. Lately, that has compressed to around 1.15 times. So what? It means the oxygen is disappearing. It means the magic trick turns back into math. And some copycats are even trading below the value of the coins they hold. So what? That means the wrapper is no longer special. That means the room is full of dancers staring at the chairs for the first time. And you can see who's getting hit hardest. Not the hedge funds playing the plumbing. Regular people buying the turbo buttons. This year, some leveraged products tied to strategy have been down more than 80%. So what? That's a reminder that leverage doesn't just make the wins louder, it makes the losses violent. And reports say investors in a handful of those leveraged strategy funds watched about $1.5 billion in assets disappear since early October. So what? That's not paper losses to someone who needed that money for a down payment, or rent, or a cushion. That's the moment you realise the dance floor was built over a trapdoor. Now, quick break. This video is sponsored by Saily, an eSIM provider that makes travel simpler. You download the app once, pick your country, pick your data plan, and you're connected when you land. No roaming shock, no SIM hunt. It works in over 200 places. If you travel, use the code BOIL for 15% off. Alright, back to the breakdown. What does broken look like? It looks like gravity returning. It looks like promises turning into bills. Strategy has big annual dividend and interest obligations, reported around $800 million a year. So what? That means it needs real cash, not just vibes, and cash doesn't appear because you tweeted harder. That's why it established a cash reserve of around $1.44 billion to help cover those payments for a while. So what? That is the king of the casino quietly counting chips. That is someone preparing for the music to stop. And when the loudest dancer starts moving toward a chair, you should notice. Because history rhymes, this is not new. Go back to the late 1920s. America was euphoric. Stocks were flying. And Wall Street sold a product that looks a lot like today's wrapper game. Investment trusts. A trust held a basket of stocks, and you bought shares of the trust. In the frenzy, people didn't just pay the value of what was inside, they paid extra for the wrapper, because they believed the wrapper was special. Goldman Sachs launched the Goldman Sachs Trading Corporation in December of 1928. It soared in the mania. Then the crash hit. By January of 1930, its market value had been cut by more than half. So what? That's not a normal loss. That's the trapdoor opening. And in the years that followed, it collapsed to a tiny fraction of its peak. So what? That's families learning the hard way that faith-based prices don't fall gently. Here's the lesson. When a product is priced on belief, the premium is the first thing to die. Once the premium dies, the wrapper stops protecting you. It becomes the blade. Now bring that back to today. The infinite money glitch depended on the premium. The premium depended on hype. And hype needs a fresh story. But crypto isn't the rebellious outsider anymore. There are ETFs. There are custodians. There are politicians begging for the vote. So what? The forbidden fruit became a fruit bowl. When the chase is over, the thrill fades. And when the thrill fades, the question returns. Why should the number go up? This is why the cheat code is failing. Now here's the smart money signal. Funding stress. Watch what these companies do when the room gets quiet. When the game is healthy, they raise money to buy more coins. When the game is stressed, they raise money to pay bills. They sell coins to pay creditors. They borrow against the stash because the stock fell too far. That's survival behaviour. That's dancers drifting toward the chairs before the music cuts. You can see it in specific moves. A chip maker called Sequan sold about $100 million worth of Bitcoin, not long after adopting the whole Bitcoin treasury identity. So what? That's not a victory lap. That's a pawn shop. It's the same dance. Talk like a believer, then quietly sell the coins when the bills show up. And when companies start doing that, it hits the entire crowd. because it's like yanking chairs out of the room while the music is still playing. People don't notice at first, then they panic all at once. You can even see the joke in one line. When a real retailer talked about doing the same Bitcoin treasury move, the market didn't clap. It sold the stock. So what? Because real businesses get judged on reality. The infinite money glitch works best when the vessel is empty. Now we're at the end of the problem phase, and you already know the line, because it is not a question of if, only when. So here's the pivot. No panic, no doom scrolling, just a plan. If this era was musical chairs, your goal is simple. Stop dancing like the music will last forever. Start positioning like you can hear the volume dropping. Not because you're scared, because you're awake. Because the machine needs you emotional. The machine needs you chasing. The machine needs you sprinting across the room at the last second. That's how you get hurt. So here's an easy two-part approach. Part 1 is what you do while the music is still playing. First, stop the bleed. Cut the obvious leaks that make you desperate later. High interest debt, late fees, subscriptions you forgot, impulse spending triggers. So what? Because desperation turns you into a bad decision machine. Second, write your rule sheet. 1 page, plain language. What you will do, what you will not do, what you actually understand. So what? Because when the music gets scary, your feed lies to you. Your emotions lie to you. A rule sheet is you leaving a note that says, "Do not run into the stampede." Part 2 is what you do when the music stops. First, follow the list, not the crowd. When everyone screams, they all move at once, and most of them move wrong, so you don't follow noise. You follow your plan. If it's not on the list, it's not happening. Second, keep optionality. Protect flexibility. Avoid locking yourself into new fixed payments when the room is chaotic. Keep space to move. So what? Because optionality is a chair you can carry. It isn't glamorous, but it keeps you from being the person left standing, shocked, when the music cuts. And that's the whole point. This isn't about being a crypto hater. It's about refusing to be exit liquidity. It's about seeing the pattern. The infinite money glitch wasn't a law of nature. It was a mood, and moods change. So stay calm, stay skeptical, listen for the volume, count the chairs. And remember, the moment you see the pattern, you stop being easy to manipulate. And here's the quiet win. Once you stop treating markets like a talent show, and you start treating them like a room with limited chairs, you get your power back. You don't need to predict the exact second the music stops. You just need to stop letting the machine push you into the middle of the stampede. Calm beats clever. Patience beats hype. If this helped you, subscribe, because we're going to keep calling out the game the way it actually works. And a final reminder, I am not a financial advisor and this is not financial advice. This video is for educational and entertainment purposes only. You should always do your own research and make your own decisions.